Well, folks, welcome back. Today, I would just like to answer a couple of questions from some subscribers. Question number one was, Rick, you talk about investing in Toronto condos, but I live in Milton. What about Milton? For that matter, we can extrapolate that and answer the same question to all those around. What about Mississauga? What about Burlington? What about Oshawa? And those are all valid questions. Now, don't get me wrong. You can do well in any of those cities. It is part of the GTA. They're all great cities. Mississauga is a very fast-growing city. I've bought condos there in the past, sold condos there in the past, made some decent money in both pre-construction and resale. So again, there's nothing wrong with that as long as the numbers work. Again, got to analyze things, look at what are rents going in the area, in the building, look at your financing costs, the condo fees. Don't forget to factor in condo insurance, and of course property taxes. If you can get to cash flow positive, or at least cash flow break even, then it may be considered possibly a sound investment. Again, so many other factors to look at. What is being built in the area that can drive value. For example, there's a LRT being constructed, light rail transit in Mississauga that might increase the values even further for the Square One area condos and other condos along that LRT. The reason why I focus on Toronto is because, for me, looking at the past and in my experience, Toronto has experienced a very fast rate of appreciation. Now, of course, recent times with what's gone on in the world has temporarily changed that. But I think, especially now with March 1st things opening up again, that over time, the demand for Toronto will surge back even further as immigration continues. People moving to Canada, a lot of them want to be in Toronto. The other nice thing about Toronto is that it's got a diverse economy. It's a world-class city. You've got so many different things for entertainment that you can do there. You've got the sporting events, you've got the nightlife, you've got great restaurants, you've got the Science Center, you've got Royal Ontario Museum, you've got some of the greatest hospitals and universities in Canada and probably even North America. You've got the lake there, waterfront, beautiful areas there. And because of all that, and of course a lot of tech jobs, big, huge companies that operate out of there. And there's always going to be, in my opinion, a rental demand. Depending on where you buy in Toronto, and actually almost anywhere in Toronto, you're going to have that rental pool. You're going to have that higher demand again, especially with things returning back to normal. So that's why I love Toronto. Again, just to recap, Toronto, you've got immigration going for it. They can't build condos fast enough for the demand. And it's a world-class city with so many things going for it: universities, hospitals, entertainment, great transit system, diverse economy, big companies, employers there. And you've got just just really everything there. The other nice thing is that you don't know what's going to happen with some of these areas in the outskirts that just boomed because of the situation that was going on with people kind of fleeing into those outskirts. So I think now is the time that, I'm not saying necessarily that they're going to come back down to some degree, but I don't think that plus 30-40% appreciation in Hamilton is going to be sustained, especially with things coming back to normal. I think now's the opportunity to be back in Toronto. Buying a condo in Toronto, I think, is a great long-term move, especially some of the resales that are 1, 2, even up to 5 years old. You're still getting something fairly new, something you could rent out right away. At this particular time, I think, based on some of the supply constraints that were happening, that pre-construction condos are a tad, most of them right now are a little bit overvalued when compared to a comparable resale. So as of right now in this current state, I think you're still a little bit better off right now with the resale. Again, at some point we're going to have a real estate expert get their opinion on the situation. But again, that's just my view right now, looking at some of the different projects that have been launching, comparing them to some of the resale projects. And that's one of the main reasons why late last year, I picked up my third condo in Toronto, and instead of pre-construction, I went for a resale that was a pretty new resale. Wasn't, in other words, the building wasn't that old. So that's the road I went. Now, let's move on to the next question that I had, which was also a very good question, and that was from one of my subscribers. The question was, what's your opinion, Rick, of the craziness of the market right now in terms of prices? Should I be buying in this? Essentially, he was asking, should I be buying in this type of market? And again, we're talking investment. So he already has his own principal residence. He's talking about an investment, either condo or house, something that will set him up for the future. So my response to that went along the lines of this. Basically, it's hard to time the market. I mean, you don't know if you buy today and then government passes some legislation, or for some reason, interest rates start going up much quicker than anticipated, and we have a bit of a market correction. What I do know is that real estate over time is tried and true. I do know that you cannot time the real estate market. I think it's more of time in the real estate market, i.e. being in real estate over the long term, that will slowly build your wealth in many great ways, as I talk about in my book, Get Rich Investing in Toronto Condos, available on Amazon.ca. And what I do is, in that book, I talk about the three main ways that real estate really is a great investment vehicle compared to many other investments out there. I mean, sure, you can invest in stocks, mutual funds, bonds. Now there's cryptocurrency, which again I don't fully understand. I get the concept, but the point is with real estate, you more safely get the power of leverage to help you, because essentially you're putting down 20% on an investment condo and the bank's lending you the remaining 80%. And in some cases, if you get a home equity line of credit against your house, you're essentially putting nothing down. You're using your whole equity that you've pulled out and putting that towards an investment property. I mean, talk about infinite returns, ultimate leverage. So again, circling back to the question is I think sometimes we just overanalyze, overthink, and the point is sometimes we just got to take the plunge and act and just get in, because the more you wait, sometimes that means a lost opportunity. And the more time you have on your side, faster you get in, the faster you're going to have that appreciation potential, and the faster that you can start making money while you sleep and stop always trading your time for money in the way a job does. And don't get me wrong, I'm not saying quit your job. You need your job to qualify for to pay the basic necessities of life, and of course to qualify for stuff like a HELOC and mortgage. This is just passive income, something that's going to help you for the future, whatever your future financial goals are. So again, real estate benefits you in three main ways. I call it ACE, A, appreciation. Okay, average 3 to 5% historically over time that you're making on the purchase price. Although in the past several years it's been a lot higher than that, and you amplify that with the leverage of putting only 20% down. And even at 5%, if you're putting 20% down, I mean, you're making 25% on appreciation alone per year. Again, that's based on past performance. Anything could happen going forward, but this is where I'm placing my investment dollars, because I believe in it strongly, and it's the only thing that's been good to me in the past. Everything else I've tried hasn't done that well. Next, part of the ACE formula, as I call it, or that acronym, is C for cash flow. Now, lately it's been harder and harder to get that positive cash flow because of the rising prices of both pre-construction and retail and resale. Sorry. That said, there are ways, as I explained in my book and one of my previous videos, is there are ways to pull out money from your home, get a HELOC, and pay interest only. And in that way, you know, especially with the rents that have been coming back strongly now, where you're able to charge back to higher rents in Toronto. You know, I found something, like I said, late last year, that I'm positive cash flow because I used a HELOC to purchase it, of about, you know, $150 per month. So you can still make it work. So that's the nice part about that. The other final piece of ACE is the E for equity pay down. Now, this applies more for when you get a traditional mortgage against the rental condo that you're purchasing, because what's happening is part of that mortgage payment, you're paying down the principal. Now, with an interest-only HELOC, you still have the flexibility of paying down whenever you want that principal. So by paying that down, especially with the extra cash flow, so if you're positive cash flow 150 or 200 bucks, you know, right off the bat, with that extra cash flow, you can use that, you know, let's say 200 times 12 months, $2,400 per year extra. If let's say you get a bonus from work quarterly, yearly, you know, and you don't need that money for something important, like a new roof for your house, or, you know, replace the furnace, then you can put that chunk down on the HELOC, and thus reducing your principal and having lower interest payments, which actually will keep on increasing your cash flow on that rental condo. So again, different ways to do things. In fact, coming up in a little while, hopefully in the next week or so, I will have a mortgage expert where we'll be talking more about this, and I'm going to be able to pick his brain on a little bit more about mortgages and what the banks look for, and different tips and tricks and you know, kind of secrets regarding that. So that's it for now. Keep the questions coming. Keep watching. If you found anything from this video insightful, if you learned something, I'm very happy about that. Please subscribe so I can continue making videos such as this. Like I said, I love real estate. I love making money while I sleep, and I want to be able to empower and share the knowledge and empower you guys to do the same thing. So that's it for now. Take care. Have a great day.